Hello everyone, and welcome back to the channel. Today, we're diving into some major news shaking the crypto world. If you've been watching the charts, you've probably noticed that Ether has taken a significant hit, and there's a big reason why. We're going to break down what happened, what it means for the market, and what you should be keeping an eye on. So, let's get straight to it. Ether, the second largest cryptocurrency, saw its price fall by over 7% in a very short period. This wasn't just random market volatility, it was a direct reaction to a major security incident in the DeFi space. A prominent decentralized finance protocol was targeted by hackers, resulting in a multi-million-dollar exploit. When news of a hack this large breaks, it sends ripples of fear and uncertainty through the market. Investors, especially those new to DeFi, start to question the security of their assets. This is what we call FUD, fear, uncertainty, and doubt. It often leads to a sell-off as people rush to move their funds out of perceived high-risk assets and into something they consider safer, or even back into fiat currency. The immediate consequence for Ether was a sharp drop in price, pushing it below the critical $3,600 support level. Now, why is this $3,600 mark so important? In technical analysis, support levels are price points where a downtrend is expected to pause due to a concentration of demand. When a price crashes through a strong support level like this, it can signal a bearish trend, meaning traders anticipate further downward movement. It breaks the psychological confidence of buyers who were previously holding that line. This event is a classic example of how interconnected the crypto ecosystem is. Ether is the backbone of the vast majority of DeFi applications. Most of these protocols are built on the Ethereum blockchain. So, when a major DeFi protocol gets hacked, it doesn't just affect that single project. It casts a shadow over the entire DeFi landscape and, by extension, on Ether itself. The hack exposes vulnerabilities, not necessarily in the Ethereum network itself, but in the smart contracts of the applications built on top of it. For investors, this creates a dilemma. Do you sell to cut potential losses, or do you hodl and wait for the market to recover? This is where your personal risk tolerance and investment strategy come into play. Panicked selling is often a losing game in the long run, but it's also understandable why people get nervous. The market sentiment shifts dramatically, and the fear of further losses can be a powerful motivator. What we often see after events like this is a period of intense discussion and analysis within the crypto community. Developers will be dissecting the hack to understand the exploit vector. How did the attackers get in? Was it a flaw in the code, a vulnerability in a third-party integration, or something else entirely? This information is crucial for other projects to patch their own systems and prevent similar attacks. It's a painful but necessary part of the maturation process for the DeFi industry. The hackers in this case managed to drain millions of dollars worth of various crypto assets from the protocol's liquidity pools. The methods they use are becoming increasingly sophisticated. We're talking about complex maneuvers like flash loan attacks or exploiting subtle bugs in smart contract logic that might have been missed during security audits. This highlights a persistent challenge in DeFi, the race between building innovative financial tools and securing them against bad actors. So, what happens next? Typically, after the initial shock, the market will try to find a new, lower support level. We'll be watching the charts closely to see where buying pressure starts to pick up again. Will it be at $3,500, or will it dip further? This will depend on the broader market sentiment and whether any more negative news emerges. It's also a wake-up call for security. We'll likely see a renewed push for more rigorous security audits, bug bounty programs, and maybe even new types of decentralized insurance protocols to protect users against these kinds of losses. Every major hack, as damaging as it is, forces the ecosystem to evolve and become more resilient. Think of it as the immune system of the crypto world getting stronger after being exposed to a new threat. For the protocol that was hacked, the road to recovery will be tough. They'll need to communicate transparently with their community, outline a plan to potentially compensate users, and most importantly, fix the vulnerability to regain trust. Regaining user trust is often the hardest part. Some projects never fully recover, while others come back stronger. Now, let's put this into a broader context. Is this the end of DeFi or Ether? Absolutely not. It's important to remember that the crypto market is still young and incredibly volatile. Setbacks like this are part of the journey. The underlying technology of Ethereum and the promise of decentralized finance remain a powerful force for innovation. What this event does is highlight the risks involved. It's a stark reminder that this is a high-risk, high-reward space. If you are invested in crypto, especially in DeFi, diversification is key. Don't put all your eggs in one basket. And please, do your own research. Understand the projects you're investing in. Look into their security audits, the team behind them, and how they handle risk. Don't just chase high yields without understanding the potential downsides. In the coming days, we'll be monitoring the on-chain data. We'll look at the flow of Ether to and from exchanges, the activity in other DeFi protocols, and the overall sentiment on social media. All of these are clues that can help us gauge where the market might be heading. Will this be a short-term dip followed by a quick recovery, or is it the start of a longer correction? Only time will tell. This hack also brings the topic of regulation back into the spotlight. Regulators often point to events like this as proof that the DeFi space is a wild west that needs more oversight to protect consumers. While many in the crypto community are wary of regulation, incidents like this can unfortunately provide ammunition to those who want to impose heavy-handed rules. Finding a balance between innovation and protection is one of the biggest challenges facing the industry. So to recap, a major multi-million-dollar hack on a DeFi protocol caused a wave of fear, leading to a sell-off of Ether and pushing its price below the key $3,600 support level. This is a painful reminder of the security risks inherent in the fast-moving world of DeFi. While it's a significant setback, it's also an opportunity for the ecosystem to learn, adapt, and become stronger. We'll continue to follow this story as it develops and bring you updates. The crypto market never sleeps, and there's always something new to learn. Remember to stay informed, manage your risk, and think long-term. Thank you so much for watching. If you found this breakdown helpful, please hit that like button, and if you haven't already, subscribe to the channel and turn on notifications so you don't miss our future updates. We'd love to hear your thoughts in the comments below. Stay safe, and we'll see you in the next video.